In this lesson, we are going to take a look at profile structures and the valuable information that the structures convey to us and tell us about market activity. Once one has a good understanding of this information, it is invaluable in terms of being able to gain a grasp on what is going on in the market and to understand market sentiment and potential price direction. As usual, before we begin our lesson, I would like you to take a few moments to pause and get acquainted with the disclaimer, read it carefully, and after you've done that, then we can proceed with our lesson. All right. Every profile structure reveals to us some very valuable information about market activity. Simply put, it tells us the story of what is happening in the market as it happens. After the fact, we can go back and take a look at it, and it will also summarize for us the results of the auction in the market. That's what makes the profile unique and what gives it that power. The ability of the profile to convey to us the status of the market and what is going on in the market. And as we delve into this and look at it together, you will begin to gain an appreciation for that as we navigate and look at different profile structures. Now, you will see here in this slide 8 different daily profiles. They all have different shapes, they have different looks, and each of them has a different story to share, a different story to tell. Let's begin by looking at 2 profiles consecutive to one another and focus on them so we can begin to really understand what their story is and what they have to tell us. The most important thing that you need to recognize in understanding a profile structure is this has to be done in context. It cannot be done in a vacuum or in abstract. What happens during a day session for a particular instrument relates to what's happening in the week, what's happening in the month, and so we have to look at the context. Now, for the purposes of our lesson, we are not going to look at the global context, meaning we're not going to also take a look at the weekly story, monthly story, and quarterly story, and the annual story. That would just take far too long. We are, however, going to use the same principles that we would analyze those larger time frame contexts to look at and compare 2 consecutive profile structures. Now, remember, when one is developing, the most current and the latest data that we have about what happened in the market is from the prior profile structure. So we have to be looking at the current structure relative to the prior structure. That's the first important point that I want to make. You always want to analyze what is currently happening in the context of what already happened. And what already happened gives us the roadmap for our analysis, as you will begin to see here shortly. We are going to begin with the very at the beginning, as they say, and we're going to begin by looking at the prior session close. Why the prior session close? Because really, when the prior session closes, the new session starts. And so one concluding point is the starting point of another. And you can see here, we highlight the close of the prior session, and sure enough, here's period A. It opened here right around the close, and it went up a little bit higher. And we begin from there. That is really our starting point for our analysis. What happens once we close and the open begins? The first question that we want to look at is, where did we open relative to the value of the prior session? So we opened here, right here, and this was the value area for the prior session. As you can see, here's my value area low, here's my value area high, and in this case I'm using the activity parameters, and you will find that the volume value area high and the volume value area low are also on our chart. But let us focus our attention right now on where the open is relative to activity value. And relative to the activity value area, it is right inside the value area. So we're opening in value, which means we're still in an area of acceptance. If, in fact, we had opened outside of value, then we would be looking to see, are prices going to return to value, or are we going to see some sort of a directional breakaway from value? So in other words, if we had opened up here and the market now was in territory above the value area, then there are two possibilities. One, prices could swing back down and head towards value because the market rejects the price action in this area, or the market accepts and the market is further bullish and we begin to see prices continue higher. So if prices open outside of value, that's what we look to watch out for. Similarly, if we were opening below value, if we'd opened in this territory, in this region, same thing. The question would be, are we going to move back up into value, or has the market really rejected that prior value, and would we anticipate that prices will continue to move lower in search of a new market value? Now, here we open in value, and so what we're going to look for is which value extreme is tested first. And of course, once that value extreme is tested, we want to know the results of the test. Did it hold or did it not hold? In this case, you will note that the market moved upwards to continue to test the value area high extreme. It didn't quite make it all the way to the activity value area high, but it certainly came quite close to the volume value area high. As you can see here, it's about a pip below, and it couldn't make it all the way up to it. It got tested in 2 periods, and then the next following 2 periods, the extent was even lower. It couldn't even get above that. So this begins to give me some very bearish sentiment signals or cues from the market when I begin to see that. I tried to test to move higher and I wasn't able to. So naturally, you ought to now begin thinking, since we tried to move higher and we couldn't, we are going to probably drop and see if in fact the lower limits or the lower extremes will hold. And as you can see from the shape of the profile, we failed up here, dropped back here, continued to rotate for a period of time in this area, and then prices dropped down, and then it continued to rotate down here in this area below value. But then when we dropped all the way down in periods M and N, they shot back up and brought me up to this area. So we ended up closing down here. And now our close, which will be the open reference for the next session, is really outside of value. It is below the value area. And we will have to ask again the same questions we were looking at. Will price in fact move back up, or will it continue to move lower? Once we begin asking the right questions and we observe what's happening in the market, we can immediately discern which side of the market to be on. If we notice continued rejection of value, then we know value is going to move lower and the direction of price movement is going to be bearish, and a short would be more in order than, of course, a long. The process of analyzing profile structures is really quite easy, but it does require patience and it takes a little bit of detective work. You have to be able to pick up on the clues and determine what they mean. So let's go back here, back to the next slide here. All right. The next question that we want to ask, in addition to where did we open, where did we close in the value range? So we know that we closed in value, but where in the range? Was it in the top part of the range? Was it in the lower portion of the range? Where relative to mid-range did we really close? The full activity range for this session was about 74 pips. That's high to low. And we ended up closing at 1.2805. So if we take a look at our mid-range, which is right about here where you see this dashed line that I've placed, we close and we open above the mid-range of the activity range. The activity range is from here to here, and we're above the mid of that range. That's why the market went up first, because that was the shorter, the closer distance, and usually you will find that to be the case. If in fact we were even higher yet, there is a greater probability we will go back up for a retest of the high rather than head right down for a test of the low. Not that that can't happen, but it is just more frequent for price action to pursue the path of least resistance, or the shortest distance for a test. After all, we're almost there, so let's see if we can push a little harder and make it all the way to the top. In this case, we did go back up, and as you can see, we have a small ledge here. The test failed consecutively in two separate periods on the profile. So obviously, if I see a ledge up here and prices were not able to extend much higher on the prior day, and I'm seeing it happen again here in the second day session, it should begin to be obvious to me that there is some selling pressure in this area. And the buyers have not been able to overtake the sellers in this price zone. Just as we look at where we were relative to the activity range, I also like to take a look at where did we close relative to the actual volume range. So let's see here. If we take a look at the volume range, which is a little bit lower, and where is our midpoint? The midpoint for the volume range is this line right here. And so we were in fact a little bit higher, and we were above both of them. And this reaffirms what we said earlier. That's why there was a greater probability that we would head and test the higher limits before we test the lower limits. So both for the volume and for the activity range, the close was still above the mid-range of both. So even though we do have some sellers up there, the bulls or the buyers have not sort of vanished. They are also trying to push a little bit higher. But every time they move higher, they get pushed back. Now, one point I really want to highlight, that as we move higher, activity begins to increase. When you get more buying, there's obviously more selling. So take a look here. When we pushed higher up here, we saw quite a bit of activity, and in this area we had the greatest level of activity, and as we dropped lower here, there was still some selling pressure. See, all of this activity, if this were all buyer dominant, we would have expected the profile to shoot back up higher. But by virtue of the fact that all of this activity pushed us lower and created a new cluster down here, that of course tells us that sellers were dominant during this region of activity and brought prices lower to close below the value area low. But notice now, the cluster below down here is nowhere near as big as the cluster up there. Naturally, as prices dropped, they were not as attractive for the seller. The seller thought this was a good point to sell at. You get a much better sell price, and here they weren't as forceful or as dominant, if you will, as they were up here in this range. But always keep in mind and understand that if we have one big large central bank that's buying, there has to be another that's capable of selling to them, and vice versa. If we have somebody selling, there has to be somebody else on the other end buying. So the question isn't are there sellers or are there buyers? The question is always which is more dominant and which is more eager to sell and which is more eager to buy. If the sellers continue to feel that they want to sell at any price they can and continue the pressure lower, then buyers will keep dropping their bid price and prices will drop lower and lower in the auction. Now you can begin to see how really the profile is a very accurate reflection of what is going on in the auction. And it also begins to show us the areas of balance. See, when we have a lot of activity like we did in this area, this is an area of balance. This is an area where both sellers and buyers were able to conduct a lot of transactions and spend a lot of time. An area where both of them felt comfortable trading. Buyers were willing to buy at this price and sellers were willing to sell at it. So we end up with a very big cluster. Now, here, when prices dropped a little bit lower, we still had some activity and we began to develop a cluster, but certainly not as big as up here. So perhaps the sellers were not as eager to sell at these low prices as they were up here. And sometimes it is also a question of strategy. They may be holding off, planning, wanting prices to come back up a little bit higher so they could get a better deal to sell at. This is something we can never really get into the mindset or the reasons behind whatever the major players are doing, but the important thing is we can see their tracks, we can see their actions, their activity, and the results of that activity on the profile structure. Those are very easy for us to see. Also, the question that we always like to ask in doing our analysis of the structure is where is the close relative to the points of control? In this case, it's above the volume point of control and below the activity volume of control. So it was right in between the two. When you see that one is quite a ways from the other, there's an imbalance here. Usually if the two of them are aligned, there is more balance in the market. But in this case, we're right in the middle. There's really not much to be said other than the fact that the heavy volume is down here. We have a lot of activity down here. So it seems that the bulk of the activity that was taking place on the prior day was in this area in terms of volume activity, and the bulk of just the time spent was up here, but it was not heavy. So in other words, The sellers were still willing to sell, but the buyers were not as aggressive and were not buying as much in terms of quantity as they were here. And notice when they were buying in large volume here, when the buyers were more aggressive, what happened? It pushed prices higher to another cluster. But then ultimately, this buying was not sustained, and so prices came back, dropped to close right here a little bit above the volume point of control, but below the activity or the time-based point of control. There is a very useful feature in profile settings that also allows us to view the volume profile below the actual activity profile. I've done that here on this chart, and as you can see the volume bars here on the chart, and you can also see them down here. Now, notice how the activity is very little, but the volume is quite intense. And once again, notice how the volume up here is even more intense than the volume up here. And we can tell that by looking at the price levels and the extent to which the bar extends out on the profile. So the further out, the longer the bar, the more intense the volume. And similarly up here, when you begin to see that these bars are much shorter, then it tells us there really was very little volume traded up here. So yes, there was activity, but the activity did not really contain a lot of volume. And similarly down here where we have a buying tail, notice how the volume is very little, but a responsive buyer came in and started buying very quickly at these levels and brought them up to this level, and then we began to see activity increase and volume levels increase. But notice there's a lot of volume down here relative to what we had here, even though there are only TPOs or 3 different periods, meaning somebody was throwing a lot of volume at it. A major player was aggressive and buying very actively everything that the seller had to sell at these levels. And this is why you see these big volume bars and yet very little activity. So by superimposing the activity profile above the or below the superimposing the activity profile above the volume profile, or having the volume bars below the activity profile, we also can get a relative sense of the intensity of the activity and the participation. How aggressive was the market participant when they stepped into the auction? So here, if we take a look up here on this profile, notice this is a very important node. A lot of volume was traded here, yet very little activity. So obviously, since this ended up pushing the close down here, this was some heavy selling. And what happens usually when you get heavy selling like that is all of a sudden the activity drops lower, because then the buyers don't want to buy anymore, and they run away. They're being inundated with items for sale, and so they move the bid price lower, and this brings the directional move lower and lower and lower. And notice here also how we have a lot of volume relative to the activity. So when prices came back to this area that was underdeveloped in the prior session, and underdeveloped meaning it didn't have a lot of activity in it, this time we had a lot of volume, and as a result of that, the volume dropped prices lower. So when we came back to trade in this area, the seller was definitely dominant, and we can see that as a result of looking at the volume bars. So this is another very useful feature of the market profile. I personally am far more a fan of the volume profile than I am the actual activity profile. I find the volume is far more meaningful than just activity, because you can have a lot of activity with very small volume, and that really doesn't influence the market that much. And basically, the market could stay in that territory for prolonged periods of time. Whereas the minute you begin to see intense, heavy volume, you are likely to see motion in the market. I always like to say that volume is the fuel that moves the market. And that's why our job when we analyze and look at the profile structures is to try to identify areas of high volume areas and low volume areas. Now, what is the significance of that? Why do we care about high volume and low volume on a profile structure? Why is it? Well, high volume areas indicate areas of balance, areas where both the buyer and the seller were willing to conduct high volume transactions. So there was a lot of activity. So in this area here, when you take a look on this profile, look at all these heavy bars, these bars that extend out, high volume areas. On the other hand, we have some areas that are low volume, and these create imbalance, meaning that in this zone, when the market sailed through here, it went through very, very quickly with very little volume, because one side was far more dominant than the other, and that created an imbalance. So here we had a lot more sellers than we did buyers, and prices dropped precipitously very quickly lower, and didn't give us much of a chance to spend much time here. So we should always focus our attention on any profile structure on areas of high volume, areas of balance, and also at the same time areas of low volume that indicate imbalance. And the market loves to come back and revisit these areas of imbalance. Now, when we talk about balance and imbalance, it is very, very important for me to mention that there are varying degrees of balance and imbalance in the market. Not all structures are, just because it's balanced, is the same degree of balance as another structure, and the same thing with an imbalance. And I guess the best way to explain that would be to actually take a look at an actual example. Let's go back to our two profiles here. Now, notice in this area here, we had very low volume, and it's a rather hefty range. We push higher, we push up because of the imbalance. The buyers are scooping up everything that the sellers have to offer, creating an imbalance, pushing prices higher. So whenever you have a very skinny, narrow area, that's an area of imbalance, and then you have to look at the outcome as to what happened to price in the market after these areas of imbalance. And that'll give you an idea about who was the dominant force, whether it was the seller or the buyer. And again, that's why the volume profile is more meaningful, because it shows me the weight that was put behind the activity, not just the activity. You could have activities that just spin back and forth with very little volume and don't tell us a whole heck of a lot. Similarly, as we get up here and we had this intense activity down here, look at how we had an area of imbalance and pushed us down again. When we came down here, very skinny, very narrow area, pushed prices higher. So obviously there was a buyer here willing to buy. Whenever we come back to revisit these areas, the question is that buyer still there? Is that buyer still committed at this level or not? Most other people will look at these levels and will try to identify them as levels of support or resistance. But really, if you look at the true meaning of what is support and what is resistance, resistance is really a market that isn't accepting the price because the sellers overtake the buyers. And support is a market where there are buyers that outpace or are more eager, more aggressive than the sellers. When we look at the profile and study the structure, since we're really studying the auction and analyzing the auction, we have to look and think of it in terms of the auction participation and their action. And therefore, I don't use the terms support and resistance as much, and I focus more on the behavior of the participants that influence the market rather than simply saying support or resistance. So, well, why is this support? We know because there was a lot of high volume here that came in and pushed prices higher. That makes a lot more sense to me than just simply saying this is an area of support. This way I have more of an understanding about market activity, and I am more in harmony with what is happening in the market rather than thinking of it in abstract terms. Once again, see the heavy buyers here. You can see how they dominate and create an area of imbalance here. It's not very narrow, but still it's much narrower relative to the other clusters that we see on the profile. Up here, notice the selling pressure. A ledge, 3 different periods come up, and all 3 of them fail to move higher. What does that tell me? That tells me there's selling pressure there. And sure enough, if that wasn't enough to convince me, take a look. Where do prices move after they drop from here? They drop lower and end up closing down here. So this was, in fact, selling pressure. All right. Now, in this area up here, the buyers were overtaken by the sellers. The sellers actually were in control. They were the dominant force and they were pushing lower, and that's why we ended up with a close there. If in fact the buyers were still in control, we would have expected prices to shoot higher yet. I hope you're now beginning to see the logic and the reasoning and the explanation of why prices move in a certain way in the market. Why, for instance, all of a sudden we quickly sailed through this area and didn't have as much activity, because we didn't have a balance between buyers and sellers. There was a sense of imbalance in the market. That's why this area was sort of, I wouldn't say skipped over, but certainly the market did not spend as much time negotiating through it or conducting a lot of transactions in it. This area, on the other hand, that we are just highlighting here is an area of intense activity. That is an area of balance. This area right here between the pressure from the sellers and the pressure from the buyers. And the market is always fluctuating between buyers and sellers. That's what an auction market does. It's constantly moving back and forth between buyers and sellers, trying to match them up as efficiently and as effectively as possible. All right, now we've analyzed the context of the prior day and what was happening in the prior session. Let's take a look at how that helps us in the new session. The new session, if you notice, the full range of the new session is within the prior range of the preceding day. We usually will call that an inside day, because the full range of that session is inside the prior session. What does that really tell us when that happens? Well, it tells us that the market found that it needed to balance this area, and there was yet a lot of activity that could be conducted within this range. So notice, in this cluster here, we begin to see a lot more volume and a lot more activity. So buyers and sellers were still very willing to transact and conduct business in this area. That's what it tells us. It was rejected up above, and we found a buyer down here, but this area was popular, and this is the area where everybody felt they could conduct their business and the exchange. And you notice how the volume started to intensify in this area. So if you will, this was an area of the meeting of the minds between the sellers and the buyers. Now, take a look here. Test of prior value area high. The session, when it opens up, goes right up for a test of the value area of the prior value area high, and it doesn't make it. Remember, this new value area high for this session doesn't exist, so this line really did not get created until that session was complete. So the parameters that we were using to guide us all came from the prior day session, and we couldn't even make it to that value area high. So we begin to appreciate and understand that that is a powerful seller up there, and the pressure, the selling pressure in that zone is strong. Now, notice the word I use, zone. It is not about a single price. Usually the market functions in zones. A zone is usually a small area, anywhere from 5 to 10 pips, and the market will fluctuate in there. So in this case, the market dropped about 3-4 pips and couldn't make it through because the buyers were overtaken by the sellers, and the test failed, and we ended up dropping in the following session. The activity zone in the second session was really this area. This would be considered imbalanced, and then after quite a bit of activity, we found ourselves imbalanced down here, heading to a lower cluster down here. Oops. My curve was a little too wide. Let me see if I can draw it a little nicer. Here we go. That is the cluster that we ended the day with, and it moved lower. We close below the value area low of the prior session as well as this session. So now we have a close below 2. Now remember, when we do close, we will have this value area low for this current session, the existing session, and this is our value area low from the prior session, and we close between below both of them, indicating a rather bearish close. That does not mean that we will continue to drop lower, but it does mean that we're probably going to drop for a retest at least of the low of this session, because this is the area that's closer, and we have to monitor and see what happens here. And then if in fact we continue lower, we need to find out if this buyer that was down here is still committed and willing to step in and buy. So if we were to ask the question, who is dominating in this session, in this second profile structure, is it the buyers or the sellers? Hopefully the answer should be intuitive for you now and easy to come up with, and it is definitely the sellers. They were dominant during this second session. All right. Here are the key price zones. These high volume nodes, if you will. Expect that every time we come back to visit them, you're going to see some reaction from the market. It is very easy to identify these nodes from the profile. Up here we had a ledge, prices were rejected. Obviously from our volume profile we know that this was very high intense volume at this price level, so and prices moved lower, so this was a point of resistance, another point of resistance, another point of resistance. Here again, and then we sailed right through this area lower to create a new cluster down here. All of these levels become points that are worthy of our attention when we begin to look at activity for the following session. Now notice how the profile structure gives us data and information that really is very valuable for trading the following session. So before the session even begins, this information is all very helpful and very useful for us. On this chart, we have the next session, the session that follows, and so now we have 3 consecutive day sessions. We've been talking about the first 2, A, B, and now we also have C. Now, take a look at the C profile, the third one in the series, and let's take a look at how things developed in that C series relative to the prior 2 sessions. We had already identified some key nodes back here and here and here, and notice now how, for instance, this key node that we had identified before and this one, we had a selling tail up above here at the top, so this zone of selling was still really very much intact. Now take a look at, we had also talked about a strong buyer here, and sure enough this zone still held. We weren't able to drop far into it, meaning that the buyer stepped in, and notice we have very little development up here, but we begin to see more activity as we head higher in the price range. This is really interesting. So there is a buyer support zone here. This buyer continues to support this zone, and notice we couldn't really make a dent into it. And that's very important for us, because now we are starting to see the framework for the market, where the selling forces are and where the buying forces are. It should be obvious now if we wanted to highlight the seller or the resistance zone up here. It is right up here. Notice it's right there. But take a look at what actually happened during profile C. Well, obviously we came down for a test of the buyer and this zone here where we've had an aggressive buyer, and sure enough the buyer pushed us higher. So the buyer is still there, still interested, and would not let us to navigate very much lower. Where do we see the bulk of activity in the session? In this region, in this area. This is where we found acceptance now. And something very interesting is starting to happen. Notice, before the area of acceptance was here, and then it dropped us down here. But now we seem to consolidate and see the bulk of our activity here. But there is something rather interesting that happened. We end up closing up here, outside of the value area for this session and on the high end. So we're closing above the value area high. And first of all, the fact that we close up here, what does that tell us? What is the profile structure telling us? We had a lot of activity here, acceptance. But since we closed above the value, was this activity buying or was it selling? And hopefully you answer the question before I am going to answer it. And the answer is this had to have been buying activity. After all, if this was selling activity, or the sellers were dominant in this activity, I should have seen prices drop, prices move lower. But on the other hand, it seems that the buyers were dominant, and as a result of that they pushed prices higher, and we ended up with a close above the value area high. That should be intuitive to you now. Yet we did not overtake the seller's resistance zone up here. So this is a rather interesting development in the market. I'm seeing acceptance of prices here, and I'm seeing slight buyer domination in this zone, and this buyer holding. there. But remember, whenever there's buying, there's also selling. So all this activity and whatever strength this buyer had, the seller was willing to supply it and sell to it. So perhaps now the sellers were more inclined to sell at lower prices. And so the buyers were willing to buy at these prices, and this is what shot the prices higher. So now I have another interesting question to ask. What does this tell us about market sentiment? Are we seeing a reversal here? Would you be now willing to take a long, or would you be still bearish on the market? I want you to think about that for a moment. Is it time for a short, or is it time for a long? Well, the secret here is the close. Notice, yes, this was buying activity, and it shot higher. So we did have a little bit of upside momentum, but this really never surpassed and never took out the seller resistance zone up here. It could simply be that the sellers now are more inclined to sell lower. I would not be wanting to think about longs until I am comfortably above this level. I'm a conservative trader, and so far I have seen no evidence that these sellers have been overtaken by the buyers. All I've seen is evidence that the sellers have been persuaded to sell at lower prices, and the buyers had an appetite for them and were willing to buy in this zone down here. Notice even the light activity up here in this area. There was not a lot of buying or selling for that matter. Very low activity, very low volume bars. So, is it time for a short? Absolutely not yet. I want to see a retest of this area, and I don't want to take any shorts until we test this zone and I see that this seller zone holds. Once this selling zone holds, then I would be inclined to think about and entertain shorts. But at this point in time, the profile is not telling me that it's time to short at all. So let's take a look together, and the session close really reveals to us that we still close well below the seller zone. So I would not be inclined to really think long. I'm still dubious. I want to make sure that we can overtake these sellers. But since we closed here, I think there's going to be a very high probability we are going to come up and test this zone again. It will probably happen in the following session. Now, take a look. Sure enough, we go back up and test. We make it all the way up here to this, just below the prior high that we had made, and we drop back down. Notice the high volume bars here. Not much of a rotation up here. As a matter of fact, we have an imbalance. So when the buyers tried to push higher, they couldn't. The sellers then dumped on them, and we see this imbalance, and then we dropped immediately to a lower zone cluster, and we rotated here for a bit, and then we dropped even further. This is a very imbalanced profile. Not a lot of activity anywhere, just sort of kept dropping to different clusters, and notice where we end up closing. Now, knowing what we had known from the prior profiles, there would have been ample opportunities for shorts during this particular session. And when we look at our trading strategies and how we implement them and use them, In some of our other lessons, we will talk about how to capture those opportunities. But in these lessons, we're really looking at ways to analyze, not so much to execute trades. And as a matter of fact, generally speaking, I do not use this type of profile chart for my trading activity or the trading strategies. There are other charts that include the profile that are far more helpful when it comes to trading, but these are excellent analytical tools, and as you can see, they really help us to see the dynamics of the auction and the flow of what is happening and the participation. Information that you will not see on any other chart. Notice all these volume bars showing you all the intense areas of volume participation at these price levels, and even here we had intense participation. As a matter of fact, this was the volume point of control, meaning that during this entire session, this ended up being the point that had the greatest volume throughout the session. And as a result of that, where did we end up close? Pretty close to the low of the entire session. Interestingly enough, we still have not taken out this buyer, this strong buyer that was here, but we're really knocking on their doors. We're at the threshold of the strong buyer zone. So back again, this session here demonstrates certainly seller domination and an imbalance in the market during that session. Here's the bar that we had for the buyers, and notice how this is not a coincidence, this is not by chance, this is the same exact rectangle that I had drawn before, and notice how it comes right to it and stops. When you begin to see this level of accuracy, you begin to gain that appreciation that I was describing to you earlier about the power of the profile. We are looking at the market, analyzing it based on data and information that it gives us. We're not guessing, we're not trying to draw something that wasn't there or something out of our imagination. We're using actual market activity data for our analysis, and that is very, very valuable. And being able to understand the auction and put the pieces together and identify what the participants are doing is really invaluable in gaining that edge in the market and developing your trading strategy. Now take a look at the 5th day. And I've had to reduce the size of the profiles, but they're really the same 4 that we've been looking at all along. I haven't changed anything. And notice now, here's what happens. We come back up, and notice we come back up to this low volume area. This area we test again, the area that we just dropped right through, and notice the big chunk of volume there that pushed us lower. It does not hold. It now becomes an area of selling pressure right here. And it has moved all the way down from way at the top down to here. And here's our prior support zone, or this is where the buyers were before. I'm calling it support zone, but really this is where the buyers that we had identified very early on were. And notice what happens. We come down, we trade through it, we have a fair amount of activity, and we drop even lower, another cluster. But I want you to notice the volume bars. Now volume is increasing down here, and what happens? Prices drop even further. Increased volume, and take a look at where we close. Below the value area low. Almost at the bottom of the range. We see a little bit of a buying tail down here, but it is not much to write home about. Certainly we see that the market is pushing and moving lower. So everything that these 4 profiles communicated to us was accurate. And when we discerned that it was still the sellers that were in control, we were right. And the market continued to drop lower and lower. Now, take a look at what happens. We take out the low and we drop even lower. So there's a buying tail, a new support zone, if you will, in this area, and this is especially significant because of the extent of volume that I see here. Whenever you see a single buying tail like that with a lot of volume, that's somebody making a major commitment, a major stand, drawing a line in the sand, if you will. We're going to support at this level. If this was even higher volume bars, that would even be more significant. Now notice what happens as a result of that. Prices are pushed higher and the activity level is up here because this buyer that came in did not stop here. They continued buying at these levels and the seller was unloading. Remember what we said earlier? A big seller needs a big buyer, and this big buyer here was buying. So there is a very good possibility we are going to see a halt to the move lower. So if in fact I had had a short, I would begin seriously thinking about taking my profits. The profile is telling me that we're not expanding much further, or at least we are going to pause for a bit before we continue lower. So there's nothing wrong with taking my profits and continuing to monitor what happens in the market. Notice also the higher close. We had a close here. On the following session, we have a close that is slightly higher. Let's continue on and note the high volume zones, both in this session and in this session. So the buyer was participating aggressively from the day before and continued that heavy participation. Now, take a look at what happens next. We move a little bit higher. Look at the power of the profile. I mean, it's just incredible. We were able to anticipate what was going to happen, and in fact, we knew that this volume activity would hold or curtail the move lower. So now as we begin to see a turn up, start to look for these levels that you see start to get tested. These areas of underdevelopment and these high volume nodes, they will all be tested as the market starts auctioning higher. The market is always moving between where the sellers are and where the buyers are. So the market has found buyers here. Now its job is to go back up and look for sellers. And once it finds sellers, then it needs to drop back down and see where the buyers are. The auction market, it's kind of funny that way. It is always looking for the opposite of what it finds. Buying tail support holds. Value area low holds. This is the value area low from the prior session. Notice, we come right to it and it holds. If you did not have a profile, you would not know that this was a value area low. Someone that does not understand, does not have access to the profile, would have no rhyme or reason to explain why it came right to this point and stopped. They don't know that this was a value area low from the prior day and that the buyers supported prices right at that level. They did not want it to pierce through the value area low. Notice the exact nature of the profile and the power. Higher activity cluster. All right, now here moves higher and then higher yet. The value is moving higher. Here we begin to see rejection at the volume point of control from a session 2 days ago. Notice how it respects all of these parameters. This was significant because this area here where you see the high volume and the volume point of control, this was selling a couple of days ago. So when we came up to meet that seller, the pressure was still there and it pushed us back down to close here. But if this buyer is as strong as it certainly appears to be, it probably will overtake that seller. And sure enough, the buyer does. And notice now, my buyer support zone starts to move up to here. So now I'm auctioning between buyers in this zone, a buyer that has managed to push prices higher, and a seller up at the top. The value area high holds in this case. Before, it was the value area low that held. Now, my value area highs are now starting to hold. Support moves higher, and we get up to the single naked print. Now notice here, we try to pierce through it, but selling pressure again, and it brings us back down to this level. But the market has been pushing higher and higher ever so slightly. Look at the intense volume. The buyer continues to pick up whatever the seller has to offer. So one major buyer being able to pick up from the seller. But notice, I mean, once again, the naked point of control from a prior session up here ends up being an important level. All right, so we continue to move higher until this area up here, which is now where the selling zone has dropped to. Notice, remember this area here of imbalance and how quickly we sailed right through it. So this was an area where the selling pressure was so intense that we dropped very quickly through it. We've come right back to it. Notice this area of low development, low volume area. We came right back to it. And as you will see, prices got rejected again when they arrived at it. So the buyer managed to push up all the way up to here, but once they got to this zone, it looks like they ran out of steam. And sure enough, when they met this zone, look at the drop and look at the imbalance here. The buyer seems to have been exhausted. They just, now when the seller dumped at them, look at how quick of a drop and how skinny this profile is. Single print all the way down. This is going to be very, very significant because now this is a strong selling zone. And sure enough, as you see, prices continue to drop lower. On the next slide, I'll show you how big that selling zone is. So the buyers will really have to come back and dominate that. So notice the seller was very powerful and had a lot to sell. That's what happens in the Forex market. I started out by telling you that the major participants in Forex markets are central banks. Their capacity, their capital is incredible. The Forex market trades literally trillions of dollars in a single day. So that should not surprise you. That's what makes Forex a very volatile market and also a very attractive market to trade. But notice the power of the profile, how well the profile begins to highlight and identify for you selling pressure and buying zones. Now, other interesting things that I will show you from these profiles. Take a look at these high levels on the volume profile. Look at that. Small activity, but incredibly intense high volume. Look at that. So the buyer that we were looking at is equally potent. They're buying very intense, very high volume. They're trying to combat that selling pressure. So the seller is selling extensively, but the buyer is also buying extensively. and so we end up closing right about here. We haven't taken it up much higher, but that is still very intense activity. Look at that. This is the most intense activity we've seen in any of the prior days. Look at the beauty of the profile, the volume profile with the activity profile, the two of them together. Hopefully you now have gained an appreciation for the power that the profile can bring to Forex, and the structure of the profile, and how the profile structure can give us valuable insights that we cannot gain anywhere else. These insights are invaluable to a trader. With that, I will conclude our lesson, and we should now be ready for the next one, integrating technical analysis and the market profile.